up a stock far, far beyond any fundamental analysis. And that is actually a recipe for disaster, because you're going to lose money. You could lose money big, and you could lose a lot over time.
A message that you hear over and over about people like, I sold everything, I'm buying AMC, I mortgaged my house, and I worry about those people. I don't want people to do that. I think that they should be mindful of, and I'm not trying to spread FUD. Definitely invest what you can. If this is something that moves you to do so, just only invest what you can afford to lose.
There are a lot of retail investors who have made a fortune off of AMC stock. There are also a lot of investors who keep plowing more money in. When I tweeted that I was talking to you today, what do you guys want to know out there on Twitter? One person said, I want you to tell Adam Aron that 10% of every paycheck goes to AMC till the mother of all short squeezes. Are you worried about not the fairy tale ending, but the opposite?
The only thing we all know about the future is that we're going to have to live to see that day come when the future actually arrives. And only then will we know the end of the story. And it's my job to make sure that this company grows into the valuation that it has in the financial markets.
And part of his plan to make sure AMC grows is listening to ideas from his shareholders, many of whom are apes, who lovingly refer to him as the silverback. He's listening to their ideas for increasing revenues and announced several new initiatives based on their input.
We've been deluged with suggestions from our company's new owners. So many of the things that have come in our way are really good things for us to do. They want us to take cryptocurrency. So we're going to take cryptocurrency. One of the ones that I particularly love, to make commemorative movie tickets as an NFT. And that's a really smart idea.
You mentioned that you had reached out to Ryan Cohen of GameStop, and I'm wondering how far those talks have gone.
Our marketing organization's in touch with their marketing organization. There are lots of ideas that have been floated, and we'll see what happens.
As a CEO, Aron's known for turning around struggling companies. He ran Norwegian Cruise Lines, the Philadelphia 76ers, and Starwood Hotels before joining AMC. And he's prepared to fight to save this company.
I feel like I've been training for this day my entire life. I felt I wasn't just doing a job, that I really was given a mission by these retail investors. You're in charge of this 101-year-old American institution. Don't let it disappear. Don't let this COVID virus or Wall Street take it down. Don't let it happen. And that's something I've taken to heart.
His plan is to make AMC more than a theater chain.
We have a massive valuation of our company right now, and we need to grow into that valuation. And I think a way to do that is to expand the appetite of AMC and reach beyond just being a pure movie theater play and do other things as well in the future as we did movie theaters in the past. We have a lot of ideas on that score, and I think as the next 6, 18, 30 months play out, you'll see AMC branching out and doing more interesting things, and that will be the definition of success.
And the Apes have given Aron a $1 billion lifeline to do just that. Did the retail investors save AMC?
We had saved AMC first by raising a lot of money, but then the retail investors arrived in huge numbers. And yes, they saved AMC, and that's when they saved AMC, because of the retail investors. We raised another $1.25 billion in May and June of 2021. And that last $1 billion is what really will, I think, guarantee that we survive through this pandemic.
The Apes have had a powerful impact on AMC, and they're shaking up Wall Street as well. So the system is rigged.
I would say it's definitely a tilted playing field that is not in the favor of the retail public.
What's the number one reason why?
I think it's tilted because the people who are in the positions to make the rules and have the power They're immensely well-funded, they're politically motivated, and for them, no one's really called them before. We're currently operating under a market system that is essentially a duopoly between two main market makers. Sometimes they get in trouble, they pay a little speeding ticket, but beyond that, they're making money hand over fist. Why would they change?
The two main market makers Matt's referring to are Virtu and Citadel. And part of the reason some of the apes feel there's an unlevel playing field is a lack of transparency in how trades are executed. When you place a trade through a commission-free broker, the brokerage doesn't actually execute your trade. The majority of those orders are sent to two market makers. In 2020, market makers paid an estimated $2.6 billion to a handful of commission-free brokers. That's called payment for order flow. So what's in it for firms like Citadel and Virtu? They make money off your trade from the spread. The spread is the difference between what someone pays for a stock and the price it's being sold for on the New York Stock Exchange or NASDAQ. The market maker pockets part of the spread, and another part of that spread is passed on to the retail investor as price improvement. But how much is savings for the investor versus profit for the market maker is unknown. Virtu Financial CEO Doug Sifu argues payment for order flow is good for the little guys.
Obviously, there are stocks that are more of interest to retail investors, and so you're going to have more of that sent by the retail brokers to wholesalers. There are approximately 200 retail brokers, wealth managers in this country. About 10 of them take payment for order flow. The other 190 do not. And they still send their orders to a wholesaler. Why? They don't have an economic interest. Ironically, all of the folks that you just mentioned that are complaining, they're actually getting better execution than an institutional client that's going to pay us a commission that doesn't get any price improvement. So the retail folks that are watching this, you're getting better execution with immediacy, with a full print to the tape, than as compared to any institutional investor in this country.
But critics believe those order flow deals should be made out in the open, so the retail investor knows exactly who's making money off their transaction and how much.
The biggest disadvantage for retail traders is that there's just no information available about the actual cost of their trade. And so they're completely at the mercy of retail brokers like the Robinhoods of the world, and they're completely at the mercy of the HFT predators and others who are literally picking their pockets. And yes, they may be picking their pockets of nickels and dimes, maybe a quarter every now and then, but that really adds up. We estimate that the profit that's being made off of retail traders is probably in the neighborhood of more than $20 billion a year.
Former Citadel trader Dave Lauer isn't a fan of payment for order flow either.
By taking those orders away from lit markets, you widen the spreads because everyone wants to trade against those orders. Those orders are profitable for market makers. So all I'm arguing is that we should have open competition for order flow.
So basically what you're saying is that right now the system is such that you might get a better price, but that's like saying you're getting something at a 20% discount after it's already been marked up 40% or something like that.
Exactly.
Another concern, payment for order flow gives the two market makers a front row seat to what securities are being bid and offered at before a trade happens. The apes think that gives them an unfair advantage. Citadel CEO points out trading with that info is against the law.
We receive an order, and as the party that has to execute that order, what we look at the moment of receipt is what are the various options that we have to achieve the best execution for that order. We are not permitted to trade in front of that order. Any execution that we can achieve in the context of the market for fulfilling that order, we must provide back to the retail investor, sometimes even with a price improvement that we add on at the moment of execution.
Though SEC Chair Gary Gensler says he's looking into whether the current market structure does offer market makers like Citadel an informational advantage, even if it's just for fractions of a second.
When order flow, when trading is being purchased and sent to one wholesaler or another wholesaler, then they have information that the rest of the market may not have, at least for a short period of time. And even milliseconds matter in these markets. I think from a policy perspective, want to look at that and how we instill greater competition, in essence, for that data as well as for that order flow.
Another thing apes say is wrong with Wall Street, dark pools, legal alternative exchanges regulated by the SEC.
All you really need to know about dark pools is their name. There's no transparency. There's no regulation for all intents and purposes. And yet they're just going to throw your trade in there. The conflicts of interest in dark pools are as clear as their name is dark.
High-frequency traders and large institutions opt to trade in dark pools to keep their trades under wraps. But Apes and critics say dark pools may be used to hide illegal activities, such as front-running or trading in advance of client orders to make a profit. And they say retail investors should have access.
Dark pools, their two main functions essentially are to execute large block trades without moving any sort of security in a huge sort of way and have less transparency. Now you can make an argument perhaps for dark pools' existence, but you can't make an argument for the retail investor not having access to those same tools. That's a problem. That's something that was systemically built that way to keep the institutions on top, you know?
But Virtu Financial CEO disagrees.
It's a political pinata right now. It's very easy to say dark pools and Robinhood and Citadel and all this stuff happened. But when you dig down and you look at the facts and you look at the data, and that's what sensible regulators have done in this country for the last 30 years, every time they have looked at this practice and looked at the ecosystem, they concluded it inures to the benefit of the retail investors. And there's not another system in this world, frankly, that is as beneficial to retail as the United States.
Do you think there's a reason why so many people are angry at the quote-unquote system at this very moment in time?
I think there's a lot of people who look back on 2008. There's a good majority of my audience who endured that. I physically watched my parents at the time really go through some tough stuff because of something they couldn't control. The big guys that ended up getting bailed out, right? And people are mad about that. And I think the difference is instead of Occupy Wall Street, it's taken to the internet because the internet's a tool that allows people to speak out about the things that they want to talk about.
And in late September, Trey and the Apes took to the internet to speak out about Citadel Securities. The Army rallied, retweeted, and sent hashtag Ken Griffin Lied to the #1 trending topic in the United States on September 27th, 2021. So why all the hate for the CEO behind Citadel Securities? Remember back to the height of the GameStop frenzy on January 28th, with GameStop rocketing, Robinhood disabled the buy button on a handful of meme stocks, but not the sell button. The move sparked online conspiracy theories that Citadel was somehow behind Robinhood's decision. Called before Congress, Griffin said this under oath.
I want to be perfectly clear. We had no role in Robinhood's decision to limit trading in GameStop or any of the other meme stocks.
And Robinhood's founder explained,
Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds.
But then the Apes found what they believed to be proof of a conspiracy, documents cited in a lawsuit retail investors filed in Florida against Citadel, Robinhood, and others. The investors claim these documents show top Robinhood execs talking about meetings and conversations with Citadel on January 27th, a day before the buying restrictions. While the topics of those conversations are unclear, according to the lawsuit, the alleged scheme, Citadel influenced Robinhood execs to shut down the Apes' ability to buy meme stocks, preventing the Army from sending the prices even higher. Also, Citadel could rein in its losses on big short positions. Why do Apes believe Robinhood would play along? Because Citadel's payments to Robinhood for order flow in the first half of 2020 amounted to 34% of the company's revenue. The Apes trending hashtag calling out Griffin was hard to ignore. It roused the billionaire's firm to take to Twitter in its first tweets in 9 months, tweeting, it did not ask Robinhood or any other firm to restrict trading on January 27th. In a statement, Citadel tells CNBC, conspiracy theorists are trying to concoct an absurd and false story by mischaracterizing normal communications between Citadel Securities and Robinhood. Citadel Securities did not ask Robinhood or any other firm to restrict or limit its trading activity, as Ken Griffin told Congress. And Robinhood issued a statement to CNBC saying the lawsuit attempts to create a false narrative of collusion. As for its conversations with Citadel, a spokesperson says, In the context of January 28, Robinhood Securities was communicating with market makers in an effort to ensure continued market access for our customers. At no point did Citadel or any other market maker pressure Robinhood to move any securities to position close only. This story is still unfolding, but the Apes are already making an impact.
They are a force to be reckoned with, not only for AMC, but for all the financial markets.
For the first time, retail investors have a profound influence over a publicly traded company's CEO, further amplifying their voice. They've created a significant risk for investors who short the stocks they invest in.
I don't even know how to even really start this conversation in a meaningful way.
Well, the first thing you don't do is you don't short these stocks.
If you try to short AMC, you're going to end up just like the guys who shorted it in January. You're an idiot. The Wall Street Bets crew will run you over just like the tanks rolled over hapless soldiers in World War II.
And they could have an even wider impact on market regulations. Gary Gensler, the chairman of the SEC, says the agency is looking into some of the issues the Apes highlight on social media. Gensler has addressed payment for order flow.
SEC Chair Gary Gensler says that a full ban of payment for order flow is, quote, on the table. This wasn't in an interview with Barron's on Monday. Gensler also saying that the practice has, quote, inherent conflicts of interest.
And he has responded to concerns retail investors have expressed on social media about market structure, with 47% of all trades being executed away from lit markets.
I recently started, engaging on Twitter, and to some of those Twitter followers that are writing about dark pools, we are looking very closely at this market structure that so many of our orders, retail public orders, are not going to the lit markets, but are going to internalizers, going to wholesalers who are taking the retail public's trades rather than sending them to the stock exchanges.
So when you hear SEC Chair Gary Gensler say things like, we are looking into dark pools, you think that that's sort of the beginning of the end? Because that is in part sparked by the outcry of the retail investor, many of whom are self-proclaimed apes.
I'm very excited, to say the least. I think a physical, tangible reality of the apes, stepping in and saying these are problems, please look into them, and it's happening. I mean, that's reward. That's sick,
So when all said and done, Trey, do you think that the legacy of this whole thing will be market change?
That's what I like to think. I truly stepped into this game because I believe in a better future for everybody.
Do you think that in some ways you've already won in terms of people being more aware of these issues and it being brought to light?
We've won a particular battle, but overall, to say that the market is fair and has no issues, I don't think we've won that overall war.
But skeptics believe Wall Street may never change.
Unfortunately, this was not a revolution. Social media is revolutionary the way that it amplifies certain voices and gets these things rolling. So that's fascinating. But I'm sure that it wasn't a revolution in the sense that people talk about a revolution. It's not a revolution that way. It's the same old story of people who get excited, who think they're going to make a lot of money or think that this time is different, and then wind up having a pretty bitter experience.
And some say the apes should be focused on other issues if they want to make a bigger impact.
The Reddit rebellion and the Reddit army, which is now focused on a couple of financial firms, ought to also focus its attention on Washington. We need the Reddit army to actually move to Washington at the same time. They need to put as much pressure on elected officials and regulators as they put on short sellers. If they did that, they could fundamentally change the way the markets are regulated, and they could actually help level a playing field and have the system work for them instead of working for the big financial firms that have rigged the system against them.
Everyone loves this story. Everyone is pulling for David, right? You're hardwired to have that kind of affiliation. And now here's our opportunity to take that slingshot and fight against this evil entity. The great stories exist. This is why we go to the movies, right? To see the underdog overcome the adversity.
And that's exactly what the apes and their silverback, Adam Aaron, are fighting for.
Obviously, my Hope would be for a fairy tale ending. I'm an AMC shareholder, big one. Whether it happens or not, the only way we'll know is to live through it and get to that day, and then we'll know.
I am very pro the movement, and I'm very excited to be a part of it.
I'm always going to be a diamond hand holder.
I like seeing that number go up. I'm going to keep holding.
Doesn't matter how this turns out, I will always hold a little bit of AMC. That's what I do it for. So AMC, hold strong, baby.
Most importantly, for my family, for myself and my wife. That's why I'm an Ape.
Apes.